There are companies you're going to buy, and you're buying them because they pay dividend. There are companies you're going to buy because they are in fundamentals are good at the price they are selling at, and long term will make you money, either through dividend or through capital appreciation. I'll give you an example for Stanbic. Stanbic right now, this year alone, 2025, it is paying close to 360 billion. And someone wrote a big statement. Stanbic Bank is paying 360 billion in dividends and everything, and even people are clapping, you know. Between 2010 to 2020, Stanbic was barely giving a dividend, but it was profitable. At one point, there was 2 years there that between, I think, 2013, 2014, when Stanbic was not paying a single dividend to people, and it was profitable. But they invested in the right things that allows them now to pay a dividend. So that's the mindset you have to look at it for companies like Quality Chemicals. There are companies that are going to always give you a dividend, but that also can come at a challenge. When you look like at Airtel, Airtel is the best dividend stock right now in Uganda. It almost pays out close to 80% of their profit after tax. But that is one side of the story. The other side of the story is the company is lean. Has it invested well enough in the things that will make sure that in long term it remains competitive? So companies like Quality Chemicals, at the price they are at right now, don't buy Quality Chemicals for the dividend. You are assessing it wrongly. Buy it in understanding that for as long as these contracts they have with the different Eastern and African countries to supply the drugs, for as long as the government mandate to make in Uganda to make sure that majority of the drugs that are manufactured in Uganda are sourced in Uganda continues, then Quality Chemicals will for long term be a good company. Why? Because it will always have a contract, it will always have revenue, it will make a profit, and once in a while to pay us a dividend. And the price you are paying at is more important. You can buy MTN right now at 500 when they're about to go into a private trust, and somehow it will stagnate it, and whereas it pays a dividend, and you would have entered at the wrong price because maybe the price is so high enough, the demand for it is high enough. I'm not saying it's high, but I'm giving you fundamentals. So if you go it for the dividend alone, it's not the right thing to do. It might not be the right thing to do. So you look at the structure. When you look and when you get the financials, go deep into them and think through it. In the 10 years, how do I see this company performing? That's what makes Quality Chemicals a good purchase at the price it is at right now. That long term, that company has some of the best fundamentals. For as long as it doesn't get back into the contracts that it had with Zambia and Rwanda and they stabilize on them, then they are good to go.